Hello guys, welcome to the Trading Parrot. Despite the fact that the market is still digesting the hawkish Fed cut comments right after cutting 25 basis points, and despite the fact that we have seen some red in here, Bitcoin price during the full day after having lost the support on the 4-hour has managed to come back to the scene of the crime, and at the moment is threatening to reclaim that level. If you watch my video this morning, I mentioned that that could be the perfect recipe to turn all of this just into a bear trap. We will have to see if that is gonna hold in there and close the candle. In 3 hours we're gonna get that candle closed, so literally we need to hold the price slightly above 91.500 to generate in here what could classify as a fake out to the downside, as a bear trap. So if this plays out and we close above that level, we put another check mark and we say, maybe this time the bears are not gonna achieve it. But careful, because we close right there, slightly below the 51 RSI on the 4-hour. And if we then put a lower low in here, then we are confirming that that breakdown on the 4-hour is going to take precedence and potentially it's going to spill into the daily time frame, which at the moment hasn't taken any bullets yet, still is trading around this range, not broken below the 43 on the daily. So there is really no damage so far from yesterday hawkish comments from Powell. And as you can see, this line in there, the orange line that we are trying to reclaim on the daily time frame, let me zoom in so you can see it. We have done a magnificent job at testing the bottom of the wedge, coming back up. And if we manage today, I'm not saying we will, but if we did manage to go back above 91,500, that is big news. Now, if this completes the full move in the green outside this range, call it, let's go above 92,000, then it means that really all of this move into slightly below 90 that we saw today was just a fake out. We will have to wait and see. Obviously, the last word is always going to come from the price action, never from the analyst, never from the observer. Let's have a look at other indicators. Let's look, for example, at the fair value gaps. And here we are currently consuming one that ends at 92. So ideally, now that we are bouncing back up, ideally we want to see that we don't stop at 92, that we don't complete the fair value gap, feel the imbalance, and then see a rejection with a new low. That will be really bad for the longs. If we go into 92 and exit from the top of the falling wedge, that is what we want to actually achieve to get a bullish outcome. Now, when it comes to the bear flag in here, you can see that today we were so close, and I saw plenty of Twitter accounts, different analysts, technical analysts, looking at this layer in here. And I'm sure that many people that were long were thinking, if we put a close right below 90K, I'm just literally gonna dump everything, because the potential for downside in here can be enormous. How big? Well, literally as big as the downside that you saw in that leg. Bear flags threaten with their technical targets to repeat the same plate, and that's why we are being very cautious in this area, understanding such risk. On the weekly time frame, no changes whatsoever, because today the price action has been moving literally in a range of $2,000 to $3,000 max. We've seen 2 days in a row of inflows into ETFs spot on Bitcoin, which is actually good. I would like to see something substantial. I continue to moan about this because people say, well, we have sustained inflows. I don't see it that way. I would like to see a few 500s, a few 1,000 to see conviction. At the moment, every single thing I see there is just like dipping your toes in cold water and say, it's too cold. That doesn't really mean anything for us. And this morning also we noticed that there was this liquidity in there that pile up as soon as the double top form, and that's a recipe to come back and take that level. But let's remember the context. On a shorter term, on a small span of the price action, yes, this is a low-hanging fruit, but the bigger context is that currently what we are trying to tackle is this cute liquidity located at 96 and potentially this one that is at 100k. But if you look at those red levels, those are way larger than whatever that we are trying to hit. If we zoom in, you can see them because this is normalized using trading different. But as soon as you include other levels, anything below 80k is way bigger. So don't let anybody out there telling you that liquidation levels at 95 are massive, enormous amounts of liquidity that needs to be taken, that must be taken, because the moment that the market makers sees the opportunity to execute the bear flag into targets sub 80s, he's not gonna give a crap about the liquidity that was left on the table at 96, and instead is gonna really let that mouth spill all the saliva on top of the table by liquidating this massive monster 4 and 5. Compare it to the micro monster literally of 95 and 90 and 100k. That is just peanuts. And yeah, you could argue that at the top, that is the big beast of the table. So if really price wants to go way beyond, it can hit 130, put a new all-time high. But for that, we need to check a few more boxes before we get too excited about that. 30-day, we continue to have big levels of liquidations between 95 and 98k. And the risk to the downside at the moment is becoming heavy around the 87.2k. Now we can see that the order book has been developing in different directions constantly throughout the day. We've seen lots of support and no resistance, or resistance very far away from the price. At the moment I'm recording the video, things are looking like this. A big cluster of resistance that starts from 92 into 95. Notice this can change any minute. And just some mild support at 91k. The buying wall on fire charts looks heavy on 81k and at 74, 75k, but in between we have very small support at 85, not to mention that the support where we are, that 89, 80k, 88k, 87 are very small. We're talking about 20 million each versus 60 and 50 on the lower end. Now we can also visualize that resistance at different deviations of the price in here. You can see that the 0 to 5 is in red. That means that there is big resistance between 0 to 5% of the price. 0 to 1 is red, 1 to 2 is flat, 2 to 5 is flat as well, and 5 to 10 has huge resistance. Now, big news, guys. You don't hear this anywhere else, but all the delta that was very heavy in the past few days, that I think it peaked at around 500k, if I remember right. If I don't, just watch my videos from those days and you're gonna find this. That was the risk of the longs, and the news that you're hearing in this channel, and that's why you're hitting the like, and that's why you're subscribed, and that's why you're writing down a comment down below right now, is because we have flattened that. Now we are equivalent in terms of delta above and below the price. So literally from this point of view, short proximity to the price, market maker doesn't have a large incentive to move the price any lower than this, at least when it comes from the incentive of this indicator in particular. So in an ideal world, thanks to this not being the elephant in the room, now we could potentially move into 100k. The problem is these dudes that are producing this resistance in there. So obviously that's the challenge. We need to get across multiple levels of over 1k, get above 95k, and then we get the job done. Now all these people that are placing those levels, they're placing them with limit orders. They now know that there is less incentive to move the price lower because the delta got flattened out. In terms of longs at the moment, the price is coming back down and the longs are getting to around 68. Remember, the closer we get to 70 with the price coming down, we tend to find some support. Not all the time, but is some pattern that very frequently we observed in the past. There's been some other developments that are definitely worth touching base today, particularly Oracle crash. The stock Oracle, which is obviously to do with tech, and therefore we care about those big tech corps, had a massive drop of 11% intraday. That has dragged down the broader tech sector today. This risk of sentiment in equities is creating headwinds for Bitcoin, preventing a stronger breakout despite the rate cut. We also have jobless claims data released today. New US initial jobless claims came in at 191K, lower than the expected of 220K. This stronger than expected labor data reinforces the Fed hesitation to commit to aggressive future easing, adding pressure to risk assets. So I really wanted to touch base on Oracle, particularly because it's such a huge stock and it can definitely spread some fear across other stocks. So you can see in the context in here, on the daily time frame, Oracle has had a breakout. So from top to bottom, this fully reset the RSI, and we had a breakout on Oracle that started in beginning of December that was already on its way to some progress, getting closer to the 21 weekly. As you can see, the momentum made big move into 48, but then it got this, a massive drop intraday. So from the price of 226, it dropped to around 186 intraday. At the moment, it's trading closer to the $200. You can see that it hasn't been performing really great in the recent price action. So from around September to now, you can see a drop of total of 46%, and now is finding support at the previous resistance on the weekly time frame. This could be an area to start dipping your toes on Oracle if you are interested in tech stocks in particular. Another area I'm interested is the 152 and the 126. The effect of Oracle coming down 11% apparently is perceived across other areas of the tech sector today, and we need to be very careful because if that contagion spreads too fast, that could put at risk as well the rally that we are seeing on Bitcoin. And I'm talking about the mini rally in here. I'm not talking about an uptrend or anything, just a structure that is forming in here that has a potential to bring in some additional upside, particularly if we finally can hold above 91,500, so we can start having fun reclaiming 101 and crossing fingers that is going to bring a lot more upside if we can get there really. But if this becomes a rejection in here, we are in a perfect recipe, guys, for a bear flag to put a lot of stress on any long that might or may have not entered around this area. Let's do a quick summary. We are still within a bear flag. We are still not out of the woods if you want. We have cleared out a few elements that were part of the current risk, for example, the delta. But now we have all the shorts that are getting very cocky at this area and placing a wall of selling all the way from 92 into 95K. Whether that is enough to stop a rally, well, if things flip for the tech sector again and there is a redistribution overnight, potentially that can spill into this area, bringing a new additional wave of bidding that can definitely splash all this resistance away and tackle the area of the highs, and then take this liquidity that is still very sticky around these levels. After that, hold those levels and you open the Pandora box into 100K and beyond. But if we just grab that liquidity and then we puke, we are in the perfect position from being at 95K or around the 95, 96 to start a crash from the top of the flag, which is the preferred way to execute a short for anyone interested in trading a bear flag. Literally, you wait until you are at the top of the flag, you let the flag mature, and from that point you enter. If you are wrong, well, so be it. Put a stop loss somewhere a little bit up and then let it puke all the way with a potential downside of over 30%. Interesting. All right, guys, I hope you enjoy the video. Consider opening an account on Tubit if you are interested in taking this or any other trade. I'm not encouraging you to take any particular trade. It's always your own responsibility and do your own research. But if you're looking for a great exchange to take any of your trades, 2 minutes to register. 2 minutes because it doesn't require KYC. You get access to leverage to all the coins. It's available across the whole world. They give you $50 to trade for free as soon as you use the link in the description, or you get 30,000 up to if you deposit your own money to trade. Hit the like, subscribe, write down a comment down below, and I'll see you tomorrow. Bye-bye.